Brian Neiman, Brian Wilson, Mary Catherine Ham, today's newsmakers, and you, the Morning Majority. 105.9 FM. AM 630. WMAL.
8:37 on WMAL. We got Tony Blankley, KT McFarland, and Tom Brokaw on the program tomorrow.
Tom Brokaw. Wow.
It's coming up tomorrow. Well, right now, Larry Kudlow joins us, host of the Kudlow Report on CNBC. You can check it out 7 o'clock weeknights, and also the Larry Kudlow radio show Saturday nights at 7 o'clock here on WMAL. So last week everybody was giddy because there was a deal in Europe, and now things are kind of falling apart. I know Greece is going to have a referendum on the deal now, apparently, and I saw a poll this morning that said 60% of the people were against the plan. So what does this mean for this European debt deal, Larry?
Well, I think it's a death wish for Greece. I mean, what is it about these people?
I don't know.
You know, they peaked in 450 BC. I guess we're now once again learning why.
Let's not discount the euro, Larry. The gyro, sometimes it is called. Isn't that Greek?
Yeah, the euro.
What did you call it? The gyro?
The euro / heroes. Nobody knows how to say it.
Yeah.
No, it's really going to be the drachma. I mean, this the referendum's not going to happen for several months, right? As I understand it, not until January. But this referendum and also a vote of no confidence for Papandreou's government in the parliament. Nobody expected this, so far as I know.
Right.
I didn't expect it, and Wall Street didn't expect it because stocks plunged yesterday, and they're getting killed in Europe, or at least the bank stocks are. And it's a big problem because it kind of says, hey, wait a minute, we may not even participate, and hey, wait a minute, we may pull out of the whole deal, which means we pull out of the euro. And that would cause tremendous problems. Remember, the Greek banks, such as they are, own most of the Greek debt,
right,
which is being restructured in this default. But, of course, the Greek banks do a lot of business with all the other banks in Europe, and the other banks in Europe do a lot of business with the American banks. So the contagion effect would be alive and well. I honestly can't give you any inside information on this, anything that's not in the papers, but I just think it's a shock to everybody, and I don't think Merkel and Sarkozy knew about this or expected this.
Is it possible that Papandreou is using this as leverage to get a better deal for Greece?
Well, if he is, he's even dumber than I think he is. I mean, you're not going to... This is it. The deal was difficult to negotiate. You know, on the CNBC Kudlow report last Thursday night, I had Charles Delara, who negotiated the deal on behalf of the bank.
I saw that interview. Right.
And, you know, he's a pretty serious guy, wouldn't you say?
Yeah.
This is a pretty serious issue, wouldn't you say? And to say the whole world is watching is not to overdo it. So I don't know what Papandreou thinks he's up to.
But he was pretty bullish on that, hey, this thing, we can get everything behind us moving forward. This deal was going to work.
Well, he was bullish on the deal.
Right, on the deal, but now the deal's falling apart.
The 50% haircut. Yes, he was. He wasn't so bullish. I mean, he was mixed on the overall future, whether Greece, Italy, Spain, Portugal, France, and all the rest of them can get their massive entitlement states down. I mean, that's the ultimate long-term question, and whether they can grow their economies again. Because the more unemployment, the more benefits, et cetera, the more benefits, the more bankruptcy. So I don't know. I mean, I don't know what, what's Papandreou thinking? What's he thinking? That's all I can. That's all I can ask right now.
Well, the short of it is that
now we don't know. For example, how is the referendum going to be worded? We don't know that yet, okay? So people are assuming the worst, and maybe that's the right assumption.
But I think the short answer is that all this talk earlier that, it's been solved, it's long ways. It could still fall apart a dozen different ways.
That is correct.
Okay,
that is correct.
I want to ask you about the Federal Reserve beginning its 2-day policy meeting. 5 of the 10 voting members of the central bank's policymaking Federal Open Markets Committee are expected to disagree with Chairman Ben Bernanke. What should we read into this?
I think it would be very hard to get a quantitative easing going again. I think the idea of buying more bonds outright and pumping in more money into the system is going to be very hard, and I don't think it's necessary. We got decent news, not great news, but the economy is growing at 2.5%. The inflation rate, depending on how you measure it, is 2.5%. On the CPI, it's 3.9%. So in other words, you have slow growth, but you have growth. You have high inflation, And that is not a prescription for anything like deflation and recession that might warrant the Fed to jump into some more quantitative easing, fine-tuning, pump up the money supply, destroy the value of the dollar, if you get my bias on this. But I think that it's not going to happen. I mean, I think Bernanke's news conference is 2:15 on Wednesday. We'll learn then. But I think it's highly unlikely the Fed will make this major move of another quantitative easing. That's my reading. And by the way, as a side factor, loans are growing. This is interesting. Business loans, C&I loans, as it's called, commercial and industrial loans, are growing about 15% in the last 6 months. And business itself is investing in capital goods. They're building equipment and software and plants and building energy construction and so forth. So there's some pretty good business activity, and there's some pretty good credit activity going out there. It hasn't spread to the consumer sector yet, but nonetheless, there's so much money in the system. There's $1.6 trillion of excess reserves on deposit at the Fed. The Federal Reserve Bank doesn't need to create any more reserves.
So, Larry, we talked about the Euro crisis last week. It felt like, okay, things are okay for a while. They sort of come to an agreement. Now it's blowing up. That seems to happen once every month, once every couple of weeks. From an emotional and strategic point of view for people with portfolios, what should they be doing right now to cope with the up and down?
What I would do, invest for the long run. Okay? That's what I would do. Because you can't outguess these short-run political events. You just can't. And the market is so up and down. There's so much volatility. You wind up chasing things. I mean, let me say two things here. One, profits are good. Okay? Profits are good, and that's the mother's milk of stocks. And that's really what's carrying. Once you abstract from the European fears, profits are enough to carry stocks. You know what? They probably carry them a little bit higher. We're not going to break new ground, but we'd probably get back to where we were at the recent peak in late April. That's my hunch. You know, take it for what it's worth. I don't know that I'm any smarter than anybody else about this in the short term. But I think in the long run, the question is, will the American economy grow? And I don't think it's going to grow as long as we have these tax and regulatory barriers imposed by the Obama administration. But I do think it's going to grow in the long run because we're going to have political regime change in November 2012. And there's a revolution or a revolt going on among American taxpayers and investors and, yes, voters who want better economic policies that are more favorable to free market capitalism. I think that's the unmistakable trend. And I think that's very bullish in the long run. And having had a flat stock market for over 10 years, I think we're due for a very strong stock market in the next 10 years. So that's my take. I would say stay invested. Don't try to outguess the market. There's no point in going into cash because you don't get paid in cash. There's no point in it. So that would be my advice right now. I myself am a little less bearish in the short run than I was a month or two ago. I'm not wildly bullish in the short run either. I think you're probably in a trading range. But longer term, I think you're going to be just fine.
Thank you, Larry, as always.